Dear children, welcome to my channel Amy, that is Accountancy Made Easy. And today children, I am going to tell you the secret 3 rules of scoring 100% marks in accountancy. So, what are those 3 rules? The rules are practice, practice and practice. So children, just understand this fact that there is nothing tough in accountancy. Only what is lacking on behalf of the children is that they do not practice enough to get the concept fully, to understand the concept fully, and then they tend to lose marks. So what you have to do, you have to just ensure your practicing is done completely. And children, this practicing differs from person to person. Somebody might need to practice a particular concept 2 times, another person might need to practice it 4 times. So don't be afraid of practicing the questions, and then you will see with enough practice of the different concepts you will be able to excel in the subject and score the wonderful 100 marks, right? So on this note, let us add little more variety to our past adjustment topic, method 1, and then we will move on to the next topic so that we can complete the concept very effectively. Okay, so today I have taken few small questions and we are going to understand them one by one. So now question number 3 in our part 3, the video. So are M and S partners sharing profits in the ratio of 1:1:1? Okay. Now Ram withdrew rupees 10,000 and Mohan withdrew rupees 20,000 during the year. So children, they both have withdrawn the amount, and in this question the date of drawing is not provided. So children, this interest on drawing is a separate topic altogether which will be discussed in a separate video, but right now we can just understand here that this is the lump sum amount which is given for 1 year and without date. So the on an average 6-month rule will be applicable, that the interest on drawing will be calculated on an average 6 months. Fine. Now interest on drawings was charged at the rate 10% per annum. So what has happened, that interest on drawing has been charged, okay, whereas the partnership deed was silent about interest on drawings. So that is the error of commission, that interest on drawing was not supposed to be charged, because when partnership deed is silent about interest on drawings, so interest on drawing should not be charged, but by mistake they have charged it at the rate of 10% per annum, right? So now showing you are working clearly, pass the necessary adjustment entry to rectify the error. So we have to pass the rectifying entry and we have to show the working clearly. So children, similar pattern of question was asked in CBSE. That's why I have picked this question up, and this is a good question to understand, okay, good concept to understand. So let us start let us see how we will proceed. So we have come to know about the problem here, that interest on drawings has been charged which was not supposed to be charged. Fine. And now we know our pattern, children, that we will be first preparing the adjustment table, and in that table there are 2 headings, amount that should have been recorded and the second one is amount already recorded. So most of the time children, we can, from the question we can first calculate amount what should have been given, and then we put that amount in the already heading. But in some of the questions that might be there might be a reverse process. We might have to calculate the amount already given first, and then we will find out the total amount of it, and then we will proceed to put it in the amount that should have been recorded. So the same thing is going to happen in this question. So what we know here, that interest on drawing has been charged. Okay, so already what has been done is known to us. So we are going to calculate the individual amounts, then we will reverse that amount in the other heading, that is amount that should have been recorded. But I would suggest children here that we should not change the place of both the headings, because if we keep always the amount that should have been recorded first and we always keep the already amount recorded second, after that, then our rule of calculating the net effect will be universally applicable, that if we are getting the answer in positive, that is our credit balance. If we are getting the answer is negative, that is our debit balance. So it will keep the topic simple only. So don't change the place. Even if we have to fill in the amount already recorded heading, no problem. Let us start from here. Fine. So let us see. So now we have to do interest on drawing, and the amounts are 10,000 and 20,000. So 10,000 into 10% is how much, children? 1,000. And we are going to calculate it for 6 months. You remember how we calculate? Let me in the working note. So here interest on ours drawings will be, ours drawing is 10,000. So 10,000 into 10% is the rate. Okay. Now since the rate is per annum and time period is not given in the question, so we assume that on an average the interest will be charged for 6 months. Okay. So into 6 by 12 we have to do on ourselves. Right. So how the calculation will be? 10,000 into 10% will become 1,000. Okay. And 6 months it will become 500. So rupees 500 is the interest for ours drawing, and we have to write under this heading first. Okay. So it will be IOD at the rate 10% per annum. Okay. And 500 rupee is for R. Now children, tell me whether we should debit this or credit it. Here we have written amount already recorded to be reversed. So interest on drawing initially, what is done in partner's account? Interest on drawing is debited. It is written, you remember, on the debit side we write interest on drawing. So now we are going to reverse it. So it will be credit now, because this is the mistake we need to correct. So we are reversing it. Understood? So 500 for R. Now for M, we will see his drawing. M is 20,000, 10% of 20,000, 2,000. Half of it becomes 1,000. So interest on M's drawing is 1,000. That will also be the positive amount. For S, they have not specified any amount. So we will do the total of these two only. 500 plus 1,000. 1,500 is the total interest on drawing which has been charged, which is wrong. So children, this is the total amount 1,500 for which there is mistake. So this 1,500 needs to be adjusted. Okay. So now we are going to distribute that 1,500 in the ratio of 1:1:1. Okay. And now children, what should be done? It should be debited. Fine. Because it is the loss that has to be taken by all the partners. So 500 each, the amount will be 500 for R, 500 for M, and 500 for S. In total 1,500. Okay. Now we are going to compare it. So R 500 debit and 500 credit, it becomes dash, nil, all settled. Fine. Next for M, it will be minus 500, that is debit 500 for M and credit 1,000. Okay. So we will understand again the concept of balance, children. Balance means simply what is extra, what is more. Okay. So when we are comparing these two amounts, 1,000 is credit balance and 500 is debit balance. So which balance is extra, children? Here 1,000 rupee is bigger here. So there is balance in credit. So answer will be credit balance, and we will write the difference, which is 500. Similarly, we will proceed for S and C. So S is having debit balance of 500 and there is zero balance of credit. So what is extra? What is bigger? Debit. Fine. So his answer will be debit 500. Okay. And total will become nil always. Fine. So this is our adjustment being done. Now we are going to proceed for the journal entry. But children, in the previous question only I told you that before proceeding for journal entry, one very important fact that we should again check is what? That which type of capital is there in the question. Is it fixed capital or fluctuating capital? Okay? Because the entry will change in that scenario. So here in the question, if nothing is specified about the capital, then it is assumed to be the fluctuating capital and all the adjustments are done through the capital account. So we are going to write the entry that will be S is debited. So S's capital account debit to M's capital account. To M's capital account, okay, and what is the amount? 500 each. Fine. Now the narration being wrong charging of IOD now rectified. So children, we do the question in this manner. I hope it is clear to you now. So children, let us take now question number 4, where we are going to talk about the interest on capital. The previous question was related to IOD. Now in this question we are going to talk about interest on capital. Fine. So let us see the question. P, Q and R sharing profits and losses in the ratio 1:1:1. Having capitals of rupees 6 lakh, 4 lakh and 2 lakh. So whenever we are doing the question of past adjustment, we should be careful about which capital it is. So it is normal, they have written the word capitals, they have not specified which one, fixed or fluctuating. So this is going to be the fluctuating capital, okay, because that makes an impact on your entry, adjustment entry. Now let us read the question further. For the year ended 31st March 2025, interest was credited to them at the rate 9% per annum instead of 10% per annum. Okay, pass the adjustment journal entry. So what has happened here children, that interest on capital which was supposed to be provided at 10% per annum, but here they have given it at 9% per annum only. That means 1% less interest on capital has been credited to the partners. So what we are going to do here in the correction, we will write that 1% amount in amount that should have been recorded, because 1% more interest should have been given. Okay, so let us start doing it. So 1% of IOC will be written here, and what should be done with the IOC when we are providing? We will credit it. Fine. So we are going to write the amount. Now what is the amount of capital? 6 lakh is the amount of capital, and 1% of 6 lakh will become 6,000. Okay, so 6,000 for P and 4,000 for Q and 2,000 for R. These will be the interest on capital that should have been given more. So what is the total amount here children? 6 plus 4, 10 plus 2, 12,000. So this 12,000 should have been given like this, but they have not given it like this. They have given profit sharing ratio. Okay, so 12,000 will be, now we will take it in the second heading, amount already recorded. This 12,000 has gone to them as IOC, that we discussed in the first question. Okay, you can check in the previous video. So 12,000 in the profit sharing ratio, what is that? It is given as 1:1:1. Fine. And now what has to be done? It has to be reversed. So profit, which is normally given as a credit balance, here it is to be reversed. So that's why we are debiting it. Fine. So 12,000 in 1:1 ratio we are going to distribute. So it will become 4,000 each. So 4,000 for P, 4,000 for Q and 4,000 for R. Okay, so the total here will become 12,000, and now we can do the comparison. So comparison will be like which balance out of the two is bigger. Okay, So P is having 6,000 as credit balance and 4,000 as debit balance. So which balance is bigger, children, here? The credit balance is bigger. So the answer will be written as credit is balance, credit is extra. Balance means what is extra. So credit is extra out of the two amounts. So we are going to take that and we will write the difference, which is 2,000. Okay. Or you can say if the answer is coming out to be positive, then it will be a credit balance. But you have to be careful about the fact that you are writing this heading first, that what should have been given, and the already given heading should be the second one. If we are going by this understanding that the positive amount is always credited and the negative amount is always debited. If we change the place of the headings, then that interpretation will not work. Okay, so you should be careful about this fact. So is it clear? Shall we proceed? Okay, now for Q, he should have got 4,000. He has already got 4,000. So no adjustment required for Q. He has by mistake also got the correct amount. Fine. Now R. R has to be credited with 2,000. He should have been credited with 2,000. But he has already got 4,000. He has got extra amount. So that amount needs to be taken back from him. So we are going to debit him. Or you can understand in the other way also that debit balance is 4,000 and credit is 2,000. So which balance is bigger, children? Debit balance, right? So debit we will write here and 2,000 will be the amount in negative. And the next interpretation will also be true here, that if the answer is coming out to be minus, it is debit. If the answer is positive, it is credit. Fine. So that's our explanation, and last column always becomes nil. Fine. So this is a question. We have calculated that R should be debited and P should be credited. Okay. Now we will proceed for the adjustment entry, but before proceeding for the adjustment entry, what we have to ensure, children, that which capital is provided in the question. So they have not specified anything. That means it is the fluctuating capital. Okay. So let's do the entry now. So the entry becomes R's capital account debit with the amount 2,000 to P's capital account 2,000. And since Q is neutral, so he will not come in the entry. And then we will write the narration being under providing of IOC now rectify. So that is your question. Isn't it easy? It is easy. So let's do another question and wind up the topic. So children, let us take the final question of this method, and after doing this question and understanding it properly, you will be able to tackle each and every type of question of this method. Okay, so let us see what this question offers. A, B and C sharing profits and losses in the ratio 1:1:1, having capitals of rupees 3 lakh, 2 lakh and 1 lakh respectively. Okay, so again capitals, they have not specified anything, so we will assume it to be the fluctuating capital. For the year ended 31st March 2025, interest was credited to them at the rate 10% instead of 9%. Now here interest has been credited at 10% instead of 9% means 1% extra has been given. Okay, so this is the case of over providing the interest on capital. Pass the adjustment entry, adjustment journal entry. Fine. So we have to do this adjustment entry here. Now let us proceed with the question. So what is happening in the question? That 1% extra interest has been given. So now we are going to write that extra in the amount already recorded column, because 1% extra which has been given, that is wrong. That should not be given. Okay, so we will take it back and then the correction will be applicable. Fine. So here we are going to write 1% of capitals. Okay, and since it is going to be reversed, so we are going to write debit for IOC. Normally IOC is credited, but in this case we are going to reverse it. That's why we are debiting it. Okay. So 1% of capital. The capital of A is 3 lakh. Okay. So 3 lakh into 1% will give us 3000. Similarly for B it will be 2000, and for C it will be 1000. So what is the total of these IOCs? It will become 6000. So there is mistake of this 6000 rupees. Okay. So this has already been given as interest on capital, but it should have been given as profit. Fine. So what is the second step? Under the first heading we are going to write 6000 in 1:1:1. So correct requirement is that this 6000 should have been given as the profit. So what we are going to do? Credit. Fine. So 2000 each will be the amount when we are distributing this 6000 equally among 3 partners. Okay. And the total is 6000. And since here children we were debiting, so we have to put brackets for all these amounts. Understood? Now what we need to do? We need to compare. So 2000 credit should be for A, and already it is debit of 3000 for A. That means if we simply deduct, we are getting a minus balance. So that minus means debit, as I told you in the previous question also, that if minus is the answer, that is debit. Let us understand in the second way, that amount that should have been given to A is 2000, but he has already got more than that, 3000. So 1000 will be taken back from him. That is the second explanation. Next explanation is which balance is bigger. Credit is 2000, debit is 3000. Which one is bigger? Debit is bigger. Which one is extra? Debit is extra. So what are we going to write as answer? Debit. Fine. Debit balance. So this is our first adjustment done for A. Now for B we are going to do the comparison, and it is nil. He should have got 2000. He has already got by chance 2000. So no adjustment needed for him. For C, credit balance is 2000, debit balance is 1000. So which balance is bigger, children? Credit is bigger. So we will write credit here. 1000 is the amount. Or we can say what is the amount coming out to be, positive or negative? 2 minus 1 will give us positive 1, sorry. And that becomes your credit balance, and the last column as always will be nil. So this is our adjustment being done. A should be debited with 1000 and C should be credited with 1000. Okay. Now we will proceed for the entry. But before proceeding for the entry, what we should see, which kind of capital it is. It is simply normal capital word is there. So it is fluctuating capital. It's not fixed capital. So the adjustment entry will be done through capital accounts. Now let us write the entry. A's capital account debit, that is 1000, to C's capital account 1000. Okay. B is neutral, so he is not coming in the entry. And now the narration. Being over providing of IOC, now rectified. And this is your question. So children, I hope this method is clear to you all now properly. I have taken all the variety of questions. Now you can try any question from any book and that will be correct, provided you have understood these 5 questions that I have explained you. Okay, so this first method of past adjustment is over from my side. Now you have to do a lot of practice to make it worth, solving correctly in your exam. Okay, so this will be the end of this video, and I'll be coming with the next method in the next video. Till then, I wish you happy learning of easy accounting.